stock of the day, WiseTech, having released results this morning. It has posted a 79% increase in full-year revenue to a record $1.4 billion US dollars, thanks to the acquisition of E2 Open. However, that acquisition contributed to an 11% decline in profit to just over $200 million US dollars. Underlying net profit up 29% to $313.5 million US. The logistics software giant saying it beat EBITDA guidance with around $115 million in annualised cost savings delivered during the year. CargoWise revenue grew 11%, while its new value packs model helped lift overall new customer signings by around 30%. It is forecasting revenue growth of between 6 and 10% in FY27, betting on further adoption of agentic AI across CargoWise alongside new products including Verify Wise. Has declared a fully franked final dividend of 8.8 cents a share. That's up 14% on last year. And WiseTech Chief Executive Zubin Upper saying the result reflected a transformational year for the business. But we have seen the market respond negatively. Shares off more than 8% off the back of that. Ben, how do you see it?
Yeah, it kind of just highlights, all those numbers are positive, and it was actually a beat on our numbers to consensus expectations on quite a few line items. When you look at underlying net profit after tax, reported EBITDA was okay, revenue was in line with guidance, paid a dividend, next year's guidance looks good relative to consensus estimates, so it's all pretty positive. And the stock's down. So I suppose what really matters with this stock is not necessarily the short-term earnings numbers so much as the other issues that they're facing. So we look at the governance issues with the founder, which has kind of engulfed the business over the last 12 months. ASIC, ACCC investigations, feels like all the regulators are crawling all over them. And then probably pertinent to the business quality is this AI disruption piece. So they just lost their largest customer, DSV, which raises quite a few question marks on the strength of their business model, ability of customers to kind of internalize WiseTech's logistics software solutions, as well as this ongoing transition from to a new pricing model. So there's this AI discussion of usage-based versus seats-based in a evolving less employees world. So yeah, it's kind of a lot of different moving parts in this WiseTech result. We look at the EBITDA margin compression and think maybe that new pricing model isn't as good as they have been messaging the market it's going to be. But yeah, probably too many issues associated with this one to keep us in the stock, so we're out of it for now, and the rating would be a hold or sell accordingly.
Okay, all right, so essentially wait and see for you then. Michael, particularly technically, it looked as though maybe it sort of found a base, but is that true or not?
Well, it has been heading sideways, yeah, for the past sort of few months or so. The question is it building a base, or is it just stalling here and then it will resume that downtrend that started a year ago? So that's the big question. And Ben touched on the fact that there are a few issues happening with the company from a governance point of view. They've lost a key contract. So I think today's result really needed to just absolutely smash it in every single metric. And it just didn't really do that. So, to overcome all those problems. So it's just another case of, they're making money, not as much as we thought. There's a few things that weren't as good as we thought they would be. There's governance issues. I think there's still a big headwind with long-term yields with these sorts of pricey stocks. So just too much. I think that, and a lot of people are still, raving about WiseTech, and no one's, I think we need to get to a point where everyone just gives up on the stock, and that still hasn't happened yet. So I don't know what price it'll be when that happens. I'm still happy to stay away. We rotated out of all our tech stocks about a year ago. I look at this result. If I was holding it, I'd be selling and moving on to something that's actually making money at the moment. In terms of share price appreciation, yes, the business is making money, but if the share price isn't going up, it's pointless being there, and it's pointless looking at where it was a year ago, because that doesn't mean it was fair value a year ago. Obviously, it was well ahead of itself, and even at current prices, it's still not cheap enough, so I'd be a seller.
Interesting. You're saying essentially it comes down to investor fatigue. You're saying you just want to reach that point where investors think, that's it, I've had enough, I'm moving on, and that is your opportunity.
Then I think you've got a clear opportunity at the moment. There's just too many moving parts, too many pluses and minuses. You don't need to be there at the moment.
Okay, so that is the view then on WiseTech. It is a sell and a hold, well, potentially a double sell essentially for the stock.